Welcome to Upside, where we dig into the real stories behind the headlines affecting European venture. This week it's Lomax from Outsized with Mads and myself from Superseed VC. And we're talking UK Doge, Project Europe, IPOs and M&A up, or are they, just as the American markets melt? Plus, we've got the latest in AI and deal of the week. So, Mads, you were a bit of a traveling Wilbury last week. What's going on with you? What are you up to?
Yeah, it's been great to come back to London this week. We've had some super cool boards. We back early stage, kind of seed, and sometimes really early stage, kind of pre-seed companies. And, we backed a few kind of very early stage businesses a few years ago. And it can take some time. It can be quite hard work for those teams to find their way from kind of those early ideas and the early tech to actually launching into the market and starting to see the revenue ramp. And it's just, we had a couple of meetings this week of folks that after some years of really hard work, things are really starting to come together. And it's just such a fantastic thing to see. I mean, I walk away from those meetings and I'm so excited in, what founders are doing and what we're doing in our industry. It's a great thing.
Yeah.
It's a long-term game. That's for sure, though. It's a long-term game.
Got to be patient.
Yeah.
Lomax, what's cooking with you?
All good. Meeting founders, working with the founders in the portfolio, personal-wise, all good. Another Clear Health scan this week. So, onwards and upwards. Yeah. Celebrate that. And, all good.
Definitely. How's the office on the beach? How's the
office on the beach? The office on the beach is great. We have Wi-Fi now. We have a big table, 3 chairs, and we are going out for partnerships as we scale it up to the surf lodge on the beach for, founders, GPs, and LPs in Europe. Come and join. Yeah. Come and work.
I'm gonna. I mean, it's nearly the season for Lisbon, right? It's middle of March, and we should be there.
Sure.
This week, what's been on my mind? I saw Northvolt went finally after their Chapter 11 debacle, and they finally closed doors after raising $15 billion. That was sad, interesting, thought-provoking. I've been speaking to a bunch of founders this week. Nearly all of them shouldn't be raising venture capital. So I've been talking with them about what they should raise, and we've been discussing and noodling what if there's something that lives between angel and VC and what that looks like. So that's kind of been a really interesting discussion week on funding types. And I've seen that the Food Standards Agency in the UK might be warming up to the prospect of lab-grown meat. So I've seen that the whole lab-grown meat, which kind of fell out of favor not so long ago, might be back on the table, quite literally. So those things I found quite interesting this week.
I think that's interesting, by the way, for a number of reasons. I think that food tech has definitely been challenging in the last couple of years, but I think this is an example of the FCA, the regulator, actually taking the bull by the horns, running this sandbox program, which has been very, very successful within fintech. And we now see that for food. And it's an example of the UK being a little bit unfettered by European regulation post-Brexit.
Is that what you think's driven it? Is that what you think is behind?
I don't think it's driving it. I think the UK has a bit more room to operate now. That's it. It's not. I'm not a pro. As you know, I'm not pro Brexit, but in that respect, I think it's an example where the UK is trying to be a bit like Singapore, which has really taken the lead on early regulations for food tech.
We have to, right? I mean, if you've got to take something out of Brexit, it's been such a freaking disaster on every single level. We've got to take something good out of it, and if this kind of ability to be a bit more free form with regulation, I think is a
and actually, food tech is a place where Europe is already, can be a leader. Already has startups, which are some of the best in the world, right? So actually, look at companies like Most of Meat, Gourmet in Paris, Hoxton Farms in the UK, all going into this sandbox. These are actually world-leading companies. So it's an example where EU could lead the way.
Well, we're going to stay with the UK. There have been some interesting news reports, stories, kind of ideas coming out and almost wrapped into a UK Doge. So are we seeing the start of one? Has Elon given us the permission slip or the broader permission slip for governments to start cutting? This week, Pat McFadden, I love this title, who's the Chancellor of the Duchy of Lancaster. Now, I didn't realise, I thought that was just a schmancy title, but actually he's the most senior cabinet minister after the PM. So he was recently talking with Laura Kuenssberg at the BBC and talking about cutting across the civil service. So contextually, the civil service employs just over 500,000 people and costs the UK taxpayer around £16 billion annually. Interestingly, the UK government spent an additional $7 billion last year on temp staff. So would cutting make the difference? I know that 2016 was the low point in civil service employees, and Mads, you're going to go into some of the more detail in a second. And one other thing that caught my eye was that public sector pensions looking forwards, that bill has been estimated to be anywhere between 2.5 and 5 trillion pounds. So that's a big chunk of change. So lots of noise and movements on the cost cutting in the civil service. Will AI play a part? Will startups and the investment community get involved in here? Mads, you've got some more numbers, thoughts, and drill down into this. What's going on behind the scenes?
Look, it's the good old, I guess, if something isn't sustainable sooner or later, it has to change. And it's clear that the public finances are not sustainable in the UK, in Europe, in the US. We've been running our economies in ways that might have worked in the past, but certainly don't work now or on a look forward basis. It's sometimes said that it's easier for the Tories to raise taxes and it's easier perhaps for Labour to reform public services because to some extent, those sides are not expected to do that. And so when they do it, it's sort of, they have a little bit of air cover perhaps. And I think we saw some of that today with Keir Starmer effectively saying, look, we are going to close NHS England. This doesn't mean that the NHS as an institution is going to close, but it's a massive reform and it's really taking on one of the most powerful quangos in the UK. If you look at the UK government, it's got about 6 million employees. So more than 1 in 10 adults are employed by the government. NHS alone is more than 2 million people, local government, another 2 million. And then the civil service itself is more than 500,000 people. And that's up a lot. You mentioned 2016 as the low point or the high point, perhaps you could say, depending on how you look at it. Just 9 years ago, there were only 384,000 civil servants. So we're up 130,000 in 9 years. That's 34%. It is nuts.
A lot of this... I would say, Matt, sorry to interrupt you. If you take the 6 million, right, which is central government, local government, and civil service, actually, looking at the data recently, it's been flat at about 6 million. I was shocked by this for the last 15, 20 years. Now, clearly, we had 10 years of austerity, right, from 2009 to 2019 under the Tories, and they would have reduced the numbers, and they've come back since then, which is probably what you're referring to. But I was actually staggered by that.
Yeah, I would. So I think what you're saying is it's at a similar number now as it was 15 years ago, but it's been much smaller in the interim. And what you've seen is that there's been a massive increase in the size of the civil service, up by a third. A lot of this has been driven by Brexit, because we've got all these value-adding people that we've now had to employ to think about how we can put customs and controls and all these things we didn't used to have, and which, of course, are not creating any value for anybody at all. At the same time, we are seeing productivity in the NHS down 20% in 5 years. So although we've been pushing a lot more money into the NHS, we're actually getting less out of the NHS in terms of productivity when you measure on the operations and the procedures and the actual health outcomes. If you think about the net, the UK tax burden is the highest since 1950, and it's projected to increase further to World War II levels. Meanwhile, welfare benefits and pensions, they cost more than £300 billion a year. Today, 1 in 5 people are retired, and this is projected to increase to 1 in 4 as we get closer to 2050. So it's obvious that the country is broke if we don't take action. And it's just as obvious that we can eke more productivity out of all the money that goes into government. Well, how do we know that? Well, that's just because just a few years ago, we were able to deliver more with less. So I think the good news is AI is an incredible opportunity. It's the opportunity of a generation to transform the public sector. Starmer, Reeves, and Peter Kyle, who is the head of DSET, Secretary of State there, they all say they want to do it. And we'll see in the spring statement, which will come in a few weeks, March 26th, whether they are going to put some tangible steps in there around actual cuts, because they will have to find a way to make efficiency gains. Otherwise, the numbers ain't going to stack up.
Lomax, what can they cut? Where can
so
startups get involved? Yeah. What can we do?
Okay, this is interesting, by the way, because hot off the press, the government has announced today that they're going to find 45 billion of spending through efficiency drives using AI. Literally, Peter Kyle, I think Mads, your friend, you were with him recently, right? Has announced this, right? So I think that's a very interesting and a higher number than I would have expected, right? Out of context, the government spends 1.2 trillion every year they think they will find 45 billion of savings on an annual basis, right? Now, what's interesting, before that was announced today, that was also announced at the same time as getting rid of NHS England, which is part of these efficiency drives. I've been thinking about this because on this podcast before, I've actually been very skeptical of Doge. I think in terms of the outcomes that it will achieve. And actually, funnily enough, if you look at the US numbers recently, US government spending has actually gone up in the last 2 months, despite Doge. But we all know in an organization, when you conduct a RIF, reduction in force, start laying people off, your short-term costs tend to spike and then, will go down in the long term. So I wouldn't read too much into that. But what I was looking at it, I think Mads made a very good point that the UK spends 350 billion on welfare benefits, pensions, etc. That's an absolute number of like cash transfer to people effectively. So, that's a quarter of the spending. So in a way, you can't really automate that away, right? I think one of the obvious places you could use AI to drive efficiency in terms of cost is the 6 million workers that we just talked about, right? So did some calculations and I roughly worked out that we're spending about, that payroll is about 250 billion a year. So let's imagine you can reduce that by 10%, right? So therefore you'll find that will find you 20 billion of savings, right? And then one of the other things I've been thinking about, the problem with that from a political point of view, clearly is it's very, very unpopular, right? The politicians, it's all very well for us to say you run this like a business, but actually politically that's going to be very, very hard for the government to do. And don't forget that Labour, most of the people who work for the government are actually Labour voters, right? So they're actually cutting off, for them, it's very hard for them to do it. And also politically just to get it done. And also, of course, it's not an absolute saving because when you lay people off, if they don't find another job, the government has to pay benefits to them, job seekers allowance, etc. So there's all these like complexities that go into it. But clearly there is ways to streamline things. But there are things that I was thinking of that actually AI could really, really help with. Benefit fraud. 10 billion a year the UK loses to benefit fraud. I bet you with more efficient screening, tooling, etc., you could save a lot of money. You could a lot of money through using AI in trying to prevent for that and screen for that. So when I did the numbers, I thought I could get to 15, 20 billion a year, with more efficiency in the NHS, etc. Clearly, the government thinks they can do double that, which is great news. They point to 45,000 letters opened every day by the DVLA, 100,000 phone calls received by HMRC every single year. So clearly, which is pretty amazing. It's good. It's funny. You watch Peter Kyle. I just watched him before us getting together, and it's funny. He's almost talking like a tech founder, like talking through like how automation can actually impact your business. And of course, he's presenting this to the UK taxpayer and who non-technically initiated. So it's very, very dumbed down, but it's very compelling. And actually, this is not new though. And actually, I don't know if you came across this GovTech accelerator, public.io, which has been in London. They set it up in 2017. A friend of mine set it up, a guy I've known for a long time. They actually sold it this year. And that was an accelerator working just on GovTech initiatives. And actually, I wonder whether we should get them on the show because, to actually listen to, they will know to the next level of detail than us about this. But I would say I was surprised pleasantly by the 45 billion that they think they can find because it was higher than I back of the envelope. And of course, let's see if they can actually do it. And it will be difficult for them to do it because they're going to expend political capital to drive this through. But let's go for it. Now's the time, as Mads said. We need to.
Yeah, I think it's super exciting. I want to stay really positive and upside, true to the name of the pod, because I want to talk about Project Europe. So this is an initiative by Harry Stebbings of 20VC fame. It's a European incubator for under 25s to stop the brain drain to the US. They're offering 200,000 euros to kickstart a startup idea, which has to be a difficult to solve technical problem. I feel that this is incredibly timely. I think they've absolutely nailed the timing of this. It is time for European dynamism, so I absolutely love it. It's also great deal flow for Harry. So massive, if I was in a high school gym, I'd stand up and do the slow clap about now because it's bloody genius. His mentors and investors in the program, he's just turned the who's who of founders of European startups, like Matty from 11 Labs, Stefan from Synthesia, Sebastian from Klarna. He's turned these kinds of characters into scouts for him. So it's bloody genius. So I guess my only key challenge here is for this whole program is how will it stop the US coming in from hoovering up the best and shipping them off to the States anyway? So it kind of makes the whole program a bit so what. So we've got to fill that, growth funding gap to get them out of this incredible, positive European initiative and get them to stay European, if that's even in any way possible. But Lomax, Project Europe, what do you reckon?
I think it's a great initiative, and I think that it follows the precedent of the Peter Thiel Fellowship in the US, where they were giving, I think, $100,000. Admittedly, that was in a grant, not this program, Project Europe. They take 6.6% equity for the 200K. But actually, looking back, I did some reflecting on the Peter Thiel Fellowship and what's that achieved. What's been the outcome of that, right? Because that's been going for much longer. Interestingly, Vitalik from Ethereum fame and Dylan Field from Figma, which was is a big company that
we're going to talk a bit about that later.
Virtually exactly. They both went through the program, so clearly, that's a great result. If the program is the reason why they ended up going on to do what they would do, I would say this is a great timing, great initiative. The only thing, let's give a balanced view on this, right? The only thing I would say is
how very BBC
is just in a way they're using their platform to solve something that actually doesn't need to be solved. Like pre-seed we don't need more pre-seed and seed funding in Europe. We need, as you alluded to, the growth funding.
But I totally agree with. But do you not think there's space for more early, like founder dating, pre? My sense is
there's still a lot of money there. And the second thing, I'm not never saying no to more money. This is great, but I'm just making a point. And the other point I would make is, which is why this is me as an investor, always a bit skeptical of accelerators and incubators, because I'm like, is this actually making a difference in the sense that if there are people out there young enough, crazy enough, like foolhardy enough to jump into building a company, does this kind of program, is it needed? I mean, they're going to do it anyway, is what I'm saying. Do you know what I mean? Like, will this actually change? But for this program, will there actually be more, be bigger outcomes? So that's the only thing I was saying. But, if one individual in their 20s ends up founding a unicorn and they don't take a job in a bank, then that's a good result for the 10 million invested here, right? So it's a very low bar in terms of ROI, I'd say.
I just love the PR of it. I love.
Yeah, you're right. And sentiment. Exactly. There's absolutes and there's me being an anorak about it. But I would say there's the sentiment, and if this kind of thing was happening every week, every month in Europe, and by the way, we're seeing more of these kind of initiatives, and we have the EU company initiative now to try and solve that kind of structural problem. Yeah. Like this stuff had been happening in the US over the last 20 years, and actually in a way, like we're starting to drink a little bit more of the what's in the water in the US, I'd say. So this is great.
I'm loving that. And Mads, you know a bit more of the history, and you're going to give us a bit of a history lesson now.
I was going to go down memory lane for a little bit because I think, so here's what's interesting. Venture capital was invented in the US, in New England, but not by an American, by a Frenchman, Georges Doriot, who was, an immigrant, moved to the US and was a professor at HBS. And he set up the American Research and Development Corporation in the 40s. And that really was the first institutional venture capital firm. And his first big deal, kind of the thing that made the industry, was he backed DEC, Digital Equipment Corporation, in 1957. And he put $70,000 into DEC for a 77% stake in the company.
Cool.
And it's very punchy, right? And when he exited a few decades later, it returned $355 million. So it's 5,000x return.
Can we have one of those, please, Matt? Just the one.
Boom,
Thank you.
Just one. And obviously that got people excited. But that was all on the East Coast. That was New England. And so what about Silicon Valley, which is the thing we associate with venture capital today? Well, that all started with Fairchild Semiconductor and the traitorous 8 that broke free from Shockley. And that was also in 1957. And they were backed by Arthur Rock, who was the first VC investor on the East Coast, on the West Coast. But you're in the 50s there. And the first truly institutional firms were set up in the early 70s. So that was Kleiner Perkins that invested in Google and Amazon Sun and Sequoia that we all know today, investors of Atari and Apple and Cisco and Oracle and anybody you can think of. And it was Don Valentine who set up Sequoia, who was an ex-Fairchild employee. He had been in sales there, and he understood this new tech industry extremely well. So we are going back to the 50s, 60s, and 70s. And that's when the VC industry took off in the States. Now, Georges Doriot, he eventually came back to Europe, but not to set up a venture capital firm. He thought what Europe really needed before anything else was the equivalent
Regulators. We need more regulation.
Well, don't forget who he was. So he was a business school professor, but he was also a venture capitalist. And he wanted to set up the equivalent of HBS. And that was what became INSEAD, which he set up in France. And it's a fine place, and it's a truly European institution, and it's been very, very important for European business. But because his focus was there and not on VC, that just meant that Europe was extremely late to the venture game. And it wasn't until 1996 that the first really true, what we'd call modern European VC firm was born, and that's Index. Right? So we are 25 years behind Silicon Valley in terms of developing our ecosystem. And I think this is what we sometimes forget. Now, in the 1990s, Europe produced about 5% of the sort of global tech enterprise value came out of Europe. But in the past 10 years, that's increased to 17% as our VC industry has matured. And we can do so much more. And I think the initiative here from Stebbings is a wonderful thing. For me, it's just about we need more. And we need more of kind of the cyclical things you always talk about, Dan, with successful founders backing the next generation of founders, building the ecosystem, and that is what
that's
this
why
is
I
about.
want to keep them. That's why I want to keep them and get that recycling. I think
Absolutely.
Otherwise, it is super brain drain. In fact, this Project Europe will totally backfire because everybody will learn their true skills, get that early stage funding, and then disappear over to the States, which I hope doesn't happen. But I want to move on to AI Corner, another one for you, Mad. So we want to talk a bit about Anthropic. They've obviously just raised, we talked about that before. They've released their latest revenues. I want to have a look at Manus.im. That looks like a super cool operator style agent, looks very impressive. Larry is following Sergey and getting off the bench, looking at his new gig. And Microsoft is competing in its own backyard, which might be a bit problematic with OpenAI. So Mads, over to you and AI Corner.
Yeah, thanks, Dan. One of my favorite segments here. I'm a huge Anthropic fanboy, and the business has just been running on all cylinders and firing away. They've grown annualized revenue from $1 billion in December to $1.4 billion in February, so 40% up in 3 months. They've had a very strong launch of Claude 3.7, the new Sonnet model, and Claude Code, and it just keeps getting better. And what's super interesting is in parallel, we've seen Manus released last week. It's a new agentic platform. It's a little bit like some of the things we've seen from OpenAI, but it's just very, very powerful.
I was having a play today. It's brutally interesting. I've not even scratched the surface.
It is. It could do really, really cool things. Effectively, just for context, you give it some work, a project, and it will go off and do a 2-week research project on a company in an hour and produce you with just a beautiful, beautiful output. What's interesting is the platform has come out of China. So China is making a really, really cool application. And what's under the hood is Sonnet, Anthropic's model.
But they're open sourcing them, aren't they? They're open sourcing this, right?
Well, obviously Anthropic's model, they can't, but a lot of the platform itself, they are. And so it's just wonderful to see, all the innovation that's happening and how everybody's learning from everybody else and leveraging and using technology. And of course, it's kind of with our outlook, right? Being a techno-optimist and being, having a liberal outlook on the world, I love when you see, the West learning from China taking the best from the West, and kind of everybody.
Can I borrow that? Sure.
Yeah, look, they can't steal they could possibly steal the Sonnet code, but I think actually what they've done here is they've leveraged it fair and square, which I think is beautiful. Yeah. You spoke about Larry Page and Google of Google fame. He came out of stealth with Dynatomics. It's a company we've been aware of for a little time, but it was finally released, kind of the scoop was released by The Information, which is the Silicon Valley Silicon Valley blog. Now, what's so interesting here is he wants to build a new AI company in manufacturing, and it's all around creating models for manufacturing to help make manufacturing better. Now, obviously, Larry Page is the founder of Google, and they have a fair amount of AI power inside that business. And so the fact that he is involved in a new business outside of Google to build AI specifically for manufacturing is evidence that even the frontier labs don't think that these foundational models can solve all problems. This is the thing we've been saying for a while. You're going to see a lot of specialized models. You're going to see a lot of applications because there's so many things you can't do with a general model. So I think that's an interesting development in the industry.
Why do you think it's not being done within Google, Mads?
I don't think this is on Google's focus on model. I mean, so when you look at what Google's business plan is, for them to be involved in anything, they sort of have a rule of thumb. It has to have the potential to get at least to 1 billion users. And that's what you have with search and YouTube and Android, etc. So, right. So 1 billion is the number of users they're looking at for their business model. And I think they've looked at dynatomics and they've looked at manufacturing and said, well, it's not that. It's a completely different thing. And so we're going to develop it somewhere else.
But it's super interesting that both Larry Page and Sergey Brin have come off the bench for AI. They don't need to work. They don't need the money. So I find that this is obviously such a transformational world that they're stepping back in and starting new businesses. I think that's fascinating.
As anybody who is in the industry can see, that we are living through the most exciting time, at least since the 1990s, if not forever. The speed of development is just so fast. So and this is what's exciting us every day, right? Everything that's going on. Just a few more things to wrap up on. So Microsoft had a very close relationship with OpenAI. They were a huge early backer of Sam Altman. They are experimenting now with DeepSeek in their new model, specifically in their Copilot. That's potentially a blow to OpenAI. We know OpenAI has gotten a lot closer to SoftBank. So interesting to see how these alliances are moving back and forth in Silicon Valley. On the home front, or at least closer to home, across the channel, Mistral looks like they're pivoting from being an LLM company to being more of an application company.
Interesting.
Where Anthropic has been perfecting coding, Mistral, they've been tackling OCR and specifically tables. And what are the places in which we need lots of tables? Well, that's finance and that's accountancy. Yeah. And so we're not investors, we're not on the board, we're not privy to any sort of inside information, but just interesting to see how they are repositioning kind of what they're doing and what they're releasing. So much happening in the AI space, still lots of gyrations. We'll talk about NVIDIA and the general stock markets in a minute. It's clear we're still so early on in this journey, and it's just an exciting place to be.
I want to stay with AI because obviously the Mag 7, I'm pretty sure that most people will have seen that because of tariffs and all of the Trumpian style economics, there's been some market corrections. So all of the newsletters that I've received this week with market sections have been marked red. Most noticeably early this week, we saw effectively trillions wiped off the Mag 7 since Jan. So NVIDIA and Tesla have been taking the biggest losses. The only one stock that didn't take a fall was Meta. So the combined loss was around $2.7 trillion. Just to put into context, the UK's GDP last year was around 3 trillion, just over 3 trillion. So this is a massive market loss. What's coming to Europe? What does this mean more generally this side of the pond? What's going on behind the scenes? Mads, can you take this one?
Yeah, look, I'm actually going in a completely different direction. I would say in 6 months, Trump will fully own the economy. Right now, to some extent, he can still blame Biden and what came before him, but it's not going to last for much longer. And now everybody knows that we have been overdue a stock market correction.
Yeah, we talked about this back at the beginning of the year, didn't we, Mads? I mean, this is one of your key predictions. Yeah,
absolutely. That was we said, and I don't think it was a great surprise. Although it's still, when you looked at every single major bank said that you should go heavy into the U.S. and it was up. But we felt that a correction was overdue, possibly even a mild recession. And I think there was a time at the start of the year when nobody wanted to hear any of this. But I think to some extent, it's possible that Trump is looking at this now and thinking it's going to come sooner or later. Maybe better to get it in sooner. And so actually taking a bit of a wrecking ball to the economy, playing all these tariff games he's playing, means that he can maybe not totally tank, but at least wreck a little bit of the economy now, correct the stock market a bit, maybe get a soft recession into the economy, and then
Do you
second
think this is
half of the year
purposeful?
start to underpin.
Do you think this is because I mean I saw JP kind of up their predictions to 40% likelihood for a recession this year. So, do you think this is purposeful?
He said, in the last week that he wasn't that bothered about the stock market, which is a completely different tune from what he played in his first term, which was all about the S&P 500. Right? Stock
Yeah,
markets
he would change his language, wouldn't he? As soon as he saw the things, he would almost change his rhetoric and then watch the markets and then change his
used to
rhetoric.
call it my stock market, right? Yeah.
Yeah, Trump's put. Yeah.
So I think if you think about why is he doing this, I mean, the kind of just thinking about the game theory of it is the only thing I can think of is that he wants to get it out of the way, get it done now whilst he can still blame Biden, and then swoop in second half of the year to underpin.
You're giving him a lot of juice here, Mads.
I mean, I think just to add to that, I would say I don't disagree with Mads, but what I would say is what's going on in the stock market now is not driven by what's fundamentally happening at the company level. Like we went through earnings season already and the numbers were strong. Actually, I was expecting softening in earnings, right? Which would have driven a real more systemic issue. The jitteriness of the market is driven by Trump's trade wars, very much seems to be the case. Trump has always, we know, been a big fan of tariffs, talks about how he loves the word tariff. He was taking out, adverts in the New York Times in the 80s advocating tariffs back in the Japan trade war days. So, Trump has always had a strong position on this. He had a position on this as part of his running for the ticket for this election, right? So it shouldn't, the one thing I'm a bit surprised by, it shouldn't really be a surprise that Trump is engaging in this behavior. Some of it should have really been priced in, potentially. I guess for Trump, it's difficult to price in everything because it's so uncertain. I think, and it's interesting to see business leaders like Steve Schwarzman, the founder of Blackstone, who actually has come out in favor of this. I mean, I think Trump and Schwarzman actually, by all accounts, chat quite regularly, and I think, but what's interesting listening to what he's saying is ultimately, despite the reaction that we're seeing in the short term in the markets going down, this is all long-term good for the US economy, right? In drive, brings manufacturing back home, will ultimately be good. And I think that's the point, is that Trump wants to take the medicine now. Tariffs will have short-term implications in his view, but long-term benefit. So, in the context of his term, get this done now while he has the political capital, and the long-term benefits will trickle through. It's not like suddenly you can spin up the manufacturing and jobs overnight. This takes time, right? You need the tariffs to drive more of an onshoring, and then
the challenge, isn't it, Lomax?
The benefits from the onshoring.
It's going to take a long time to get the American engine up to speed.
Well, I don't know. I one thing, the American economy and individuals and businesses within it are extremely dexterous and quick. And, we'll talk about CoreWeave in a minute, for example, that's up for IPO. And Elon Musk building data centers in a matter of days. Like, this is the place where stuff happens fast and much faster than we're used to in Europe. So, yeah, it does take time. But at the same time, it probably takes less time than you think.
Well, listen, IPOs are up. So there is a lot of activity. IPOs, M&A, we're going to talk about in a second. So regulators stopped Adobe from buying Figma in 2023 for $20 billion. So it looks like they're going to list this year. A little side note, I didn't realize that Adobe had to pay $1 billion as part of that breakup deal when it all went south, which I thought was quite interesting. And as of this week, there have been 63 IPOs in the States. So that's 90% up on last year. No surprise, lots of crypto businesses sneaking into the pot because obviously the Trump administration is very sympathetic to crypto. But it's not all roses. Lomax, want to kick this one off?
Well, I'd say it's exciting. Like there's plenty of amazing companies slated for IPO. We talked about this in our predictions for the year, right? We knew there's been a waiting list building up of companies waiting to IPO in the tech world, and we thought that was going to open up this year. It's sort of ironic or very poorly timed that the S1s, for example, have come out for two big companies, two big high-profile tech companies, CoreWeave and Hinge Health, and suddenly the markets have done what they've done and are 10% down in the last month, for example, so in the US. So I think it's probably ill-timed, and the bankers are kicking themselves, et cetera, et cetera. But this is good. That it seems like the IPO windows are opening. I think, you've now got a couple of big high-profile tech S1s out there. as I said, CoreWeave and Hinge Health. I think CoreWeave, the story, I think is fascinating. I mean, that company was doing 16 million revenue in 2022, just two years ago. Is now slating, I think, 2 billion. So
Wow.
what's also amazing is that CoreWeave is a relatively young company. 2017, 2018, it's already projecting a valuation of 35 billion. They've raised astonishingly 12 billion, so 2 billion of equity, 10 billion of debt. That's a lot of money.
But it's data centers, right? So this is very,
data
very
centers.
timely. Yeah.
Of course. What's interesting that I didn't know, just having spent some time in the S1, is that 80% of the revenue comes from two customers. Microsoft is 60%, and it's not disclosed, but we think NVIDIA is the other at 20%. So that, as an investor, is something potentially to be worried about, but maybe not, given that there's a relatively small number of big players in this market, but certainly something to watch. But an exciting growth story, and they're projecting growing revenue to 30, top line to 10 billion, 3 billion of EBITDA. Those businesses operate at 30-35% EBITDA margins. So interesting, exciting times.
Nice. But there's a bit more other kind of chatter and noise behind the scenes, Mads.
Yeah, look, like you, Lomax, I would say it's exciting that things are happening. I'm not sure if I'm a CoreWeave investor, to be honest. I think it's a fairly commoditized proposition they have. It's effectively offering bare metal GPUs. But, we know it's been hard to get hold of them. We know it's been hard to get hold of the power to power them. So if they have a cornered resource, we're going to see for how long it remains cornered. But yes, I think that the wider context is there's a huge pent-up pipeline of candidates. There's some great companies that are waiting to go public. And as you say, markets are in principle keen to do deals. But the Trump administration is really sowing lots of confusion and business-like certainty. And I think right now we just don't have enough certainty. And so on current trend, I don't think 2025 will be as much of an IPO bonanza as we had hoped for. There will be some good deals done, but there could have been so much more with a less errant White House, I think.
And it's a shame that these two canaries down the mine have kind of actually suffered a bit. That's not going to set a great precedent. But let's just see how they get away. I think
Indeed.
While we're on this, I think Hinge Health just deserves a shout out for a couple of reasons from a European angle. So one of the founders there is German. He met his co-founder at Oxford. So it was a company born originally in the UK, but clearly has grown and grown in the US. So Hinge Health is a MSK, musculoskeletal physiotherapy online digital provider. 400 million of revenue. And interestingly, the biggest investor shareholder at 15% is Atomico, so European fund.
Nice.
So they're going to be
good.
The last private market valuation here was 6 billion. Let's see where they actually get this thing away at. But that's a pretty meaningful return for one of the bigger European venture funds. So that's a great little success story there.
Yeah, great. Well, on a similar theme, M&A is back, but it's not. I remember reading stories when according around the Trump kind of noise when he was looking like he was going to win the elections and all that was going on, and hasn't actually come to pass. We haven't seen the kind of the Trump's promised land of more M&A so far in 2025. However, there's actually a little bit of energy. But Mads, you've got a fave M&A deal this week. Tell us about MoveWorks.
Yeah, so MoveWorks is a great AI company. It was founded in 2016 by four co-founders, Bhavin Shah, Vaibhav Nivargi, Jiang Shen, and Varun Singh. And Varun, he joined my prior business as a young engineer back in 2010, and so has had a phenomenal career over the last 15 years, just culminating now in this deal they've done this week, which was they build up MoveWorks and then exited this week to ServiceNow for nearly $3 billion.
Nice.
So fantastic result and huge shout out.
No, nice. Now, deal of the week. Lomax, what's yours?
Interesting one caught my eye out of the Netherlands, which is in the nuclear space. $12 million raise or euro raise by a company called Thorizon, which is using nuclear waste and thorium as the inputs for its reactor.
We've seen a few of these, haven't we? Great.
Yeah, backed by friends of the pod at Positron, Joseph and team, and exciting. Yeah, good one to see.
Mine this week is Stroll. So they've raised 12 million euros. It's a digital therapeutics company that uses AR glasses to provide neurorehabilitation to patients living with neurological disorders like Parkinson's, stroke, or MS. And I've never been a fan of AR or VR. I've never really believed it beyond gaming. And I just love seeing this application of augmented reality to make really, really meaningful strides in these kinds of digital therapeutics. So that Stroll having raised 12 million, I think it was a post-seed or a pre-A. I always forget what the naming conventions are these days, but congratulations, guys.
I think it's a cool company. And I would just say, don't forget, digital therapeutics have been hammered in the last 3-4 years. Yeah, no, Pear Therapeutics went bust. Achilles was sold for parts. These companies that have raised hundreds of millions. And we've had a few investments in digital therapies over the while. It has been hammered, but I feel like we are now getting a greater acceptance within the buyer and payer community in healthcare, such that I think we're starting to see a bit of a resurgence. And so good on these guys.
Well, it's that kind of age-old startup mantra.
Timing.
Just stay around for luck to find you, I think, is just stay alive long enough until luck meets you halfway. But Mads, what's happening for you next week? Are you out and about? Are you traveling? What's in your diary?
Yeah, I'm going to spend a few days up in the Nordics. As you know, there are some amazing companies and amazing founders. I think it's still 2 out of 5 of the most successful startups are coming out of the Nordics in Europe. We get companies like Klarna and Spotify. So we'll spend some days there with founders and investors, and very much looking forward to it.
And Lomax, I imagine you'll be surfing, chilling on the beach, doing your sandy surfing thing.
And then might do some work, maybe. But yeah, predominantly that.
Well, I'm so going to come down one of these days. In fact, we'll do a
when the
pod from
surf
your-
lodge is up and running, and we'll have a little jeep. We'll come and pick you up at the airport. Come and
We'll do
maybe
that.
do some work, and then we can always hit the waves. We're
do
Europeans after all, guys. Come on, we've got to live up to the stereotype.
Yeah, let's do it. I'm not doing anything. I've got such a backlog of admin this week, so I'm going to be super dull. Mads and I are exploring an incubator model, so more early stage capital, founder dating plus. So we're having a little bit of a play with that. So I'm doing some modeling around that, but I'm going to be stuck in spreadsheets and admin this week, so nothing mega exciting. But this was a super exciting pod. I really enjoyed chatting with you, fine humans. Thank you for that, and I'll catch you next week. See you
Bye-bye.
Bye.
Bye-bye.